And time for the market report. Looks like last week didn't move the needle much at all.
That's right, Mike. Prices didn't rise or fall too far, but there were some interesting things on the horizon, and we'll talk about it. But first, the numbers. As we said, not too big of a jump or fall. And then, in our row report, we talk about wheat, corn, and soy. What's coming on the horizon? Markets evenly split, at least the commodities we follow. Row crops a mixed bag, while livestock swaying slightly. Let's take a look. Last week's biggest loss, wheat down 6¼ cents. Looks like the latest rally might be over for good as we find a stable price range. Last week's biggest gain, soybeans up 8 cents. Seems weather and supply making the biggest factors on this, not to mention trade issues, both current and potential. So with wheat, we've had one heck of a year. It's been possibly the biggest row crop story, and for good reason. With the Ukraine war, remember, Ukraine and Russia produce nearly 1/3 of the world's wheat supply. This is a big deal. However, according to Chris Robinson, there's more to the bullish wheat markets than meets the eye. There's also the South America connections along with global supply.
You know, it's interesting. There's so many reasons to want to be bullish wheat. Fundamentally, we've got tight stocks. There's concern that we are planning into, too dry. We'll have to find out if enough fertilizer actually hit the ground because it was so dry. I think that's going to be the talk for the next 3-4 months. And then we also have what's going on in South America. Are we going to have another drought watch down there? Wheat, it was interesting. The best cash sale opportunities producers had really came, unfortunately, out of what was going on in Ukraine. You can go back and look. Every spike that came out of that part of the world was short-lived and had no legs, right? We just had about a month and a half ago, we had a $2 rally, $2.20 rally. We're right back. We've given back half of it today. Of course, it's the middle of the week, but especially for Kansas City hard wheat, it's sitting right at a kind of a critical level. You've got Chicago wheat at $8. You've got KC wheat at $9. If those levels fail, you could see more long liquidation. So people want to be long, but if they don't get paid to be long, they won't stay forever. And I think that's the concern as we finish the end of the year. We're into the holiday markets. You see the type of whippy actions we had. Every night you go to bed, it's a 10 or 15 cent trading range. So I would be very, very careful getting too bullish or too bearish here. But we got key levels coming up here that have to hold for wheat.
Continuing our row report, we move on to corn and soybeans. Both Chris Robinson and Ernie Goss, who you saw earlier in the show, talked about the big issues facing row crops. On the menu was spiking prices, transportation issues, and ultimately rural land prices affecting crop costs.
Our corn exports are lower than they need to be. And again, this is all going to come every month. The USDA has got another report. Sooner or later, they're going to actually grind through the numbers and say, okay, we have not had the exports that we thought we would have, therefore it changes the carryout. So I think that the December report, probably not that big a deal, but certainly the January 12th report, where we get the final numbers, final production, that's going to set the tone in a lot of ways. And unless there's a weather issue, there could be some downside risk for the grains. Well, this is a bit of a year where if you haven't had your orders resting at the elevator, you missed them. Some of these spikes have been there for literally minutes or hours. They haven't lasted. There has been no follow-through on any of these rallies. I would say this, if you're storing anything, you need to get a floor under it. You need to have your risk on paper. Putting a floor under it is not getting bearish. It's not calling a top, but you need to protect that revenue. Moving ahead to next year, you still got, if you look at these 23 corn already, you look at November 23 beans, those are still at good levels. You've got these 23 corn well above $6, kind of teetering there at 6.10, but that's a key level. And then you also have had multiple times where new crop soybeans, they can't get above $14, can't get above $14. So if you're saying what's your risk looking out the rest of the year, you can point to the summer lows, right? We actually have had a nice rally since those summer lows. And so if I'm looking out as a roadmap saying, okay, what am I worried about? I would start with those lows.
Another issue regarding particularly corn, I think, is barge traffic down the lower Mississippi. There's some real issue. There are some real issues there. That's reported by our bankers. They also talk about drought conditions, particularly west of the Missouri. In our survey, that would be, of course, Nebraska, Kansas, Colorado, and Wyoming. and of course then up north of North Dakota and South Dakota. Not as much Iowa, of course, but also land prices. We ask about farmland prices are continuing to grow despite these weaker farm conditions, and we asked the bankers look into 2023, and they're saying they're going to see it plateau, most of them. Some even said decline, about 20% decline in farm land prices. Now we'll wait and see if that happens in 2023. But the farmers saying, well, I don't sell land, I sell what's on the land. And they're like, I mean, we're all thinking, well, you've gotten rich. No, you sell corn, soybean, and other things. But those are things they're talking about particularly. And again, the supply chain disruptions, labor shortages. I mean, the farmers in this part of the country aren't big users of labor that would be off the farm, but it still makes a difference.
And that's it for a deeper look into the markets. Looks like things are getting stable into this holiday season. Let's hope it keeps steady.